All right, let's dive into some stock picks for December 2024.
Sounds good.
We're looking at the Motley Fool today,
Okay.
and they've picked three companies
Right.
that they think are no-brainer buys.
Interesting.
And the interesting twist is that they're all connected to the AI boom.
Oh, wow. That's
Yeah.
yeah, that's a hot topic right now.
So we're going to take a deep dive into these picks and see why the Motley Fool thinks they're so promising.
That sounds great. Yeah, let's
Okay.
see what they have to say.
So the three companies are ASML, Taiwan Semiconductor Manufacturing, or TSMC, and Meta Platforms.
Oh, an interesting mix.
Yeah, I know, right?
And it's not immediately obvious
Yeah.
how they're all connected to AI.
Right, like Meta, sure, I get that.
Yeah.
They're all over the news with their AI stuff.
Yeah, they're making big moves in that area.
But ASML and TSMC,
Yeah.
those are not names I hear every day.
Right. Not exactly household names for most people.
So before we even get into that, what makes the Motley Fool a good source to listen to?
Oh, yeah, good point.
Like, why are they the authority on this?
Well, they've been around since 1993,
Okay.
and they've built up a pretty solid reputation.
Okay.
They're known for a long-term, growth-focused approach to investing.
Okay.
Millions of users
Wow.
rely on their advice, and they have these premium services that are quite popular.
Okay.
So when they say something's a no-brainer,
Yeah.
people tend to listen.
Okay, so they've got the credentials,
Right.
but I'm still stuck on how ASML and TSMC are involved with AI.
Yeah, I get it. It's not immediately obvious
Yeah.
how chip manufacturers are essential to this whole AI revolution.
Yep.
Like one of those things that makes you realize how deep this AI thing goes.
Yeah.
Each of these companies plays a crucial but different role
Okay.
in this whole AI ecosystem.
Okay, I'm kind of intrigued.
All right.
Break it down for me.
Okay.
Starting with ASML, what do they do?
So ASML.
Yeah.
They're the only company in the world.
Wait, the only company?
Yeah, the only company making these extreme ultraviolet lithography machines.
Okay.
Which are vital for producing these super advanced chips that power AI.
So they're not like
Yeah.
regular machines.
They're very specialized.
They're like the...
Yeah, you're talking about shrinking components down to like
Yeah.
nanometers,
Yeah.
billionths of a meter.
I can't even comprehend that small.
It's mind-boggling, and ASML's machines are what make that possible.
So you said the only company?
Yeah,
Like they have a monopoly.
a complete monopoly
Ah.
in this very specialized area, which is,
That's crazy, especially in the tech world.
yeah, it's pretty unusual.
Okay, so they've got the tools,
Right.
but who's using those tools to make the chips?
Ah, good question.
Is that where TSMC comes in?
Precisely.
Okay.
TSMC is the world's largest dedicated semiconductor foundry,
Okay.
which means they just focus on manufacturing chips.
Okay.
They take those super sophisticated machines from ASML
Got it.
and use them to make chips for companies like NVIDIA. Who are the powerhouse behind AI hardware?
Mm,
And, of course, Apple for
Right.
all their devices.
makes sense.
Yeah,
Okay, so it's like,
it's a tag team.
yeah, like ASML makes the equipment.
Exactly.
TSMC uses it to pump out the chips that end up in everything.
It's pretty fascinating how it all comes together.
Okay, so we got the tools, we got the chips. Where does Meta fit into this?
Right, because they don't really make hardware.
Right.
So their role is more on the software side of AI.
Oh.
They've been putting a lot of resources into generative AI,
Okay.
particularly their Llama model.
I've heard of that.
What makes Llama different is that it's open source,
Oh, interesting.
meaning any developer can access it and modify it.
Okay, so most people, when they think of Meta,
Yeah,
they think Facebook, social media.
right, but they're really pushing into AI.
Yeah.
And this open source approach is different.
Very different, yeah.
Yeah, it's not what a lot of other companies are doing.
So how does that help them?
Well, that's what the Motley Fool article
Okay.
points out as a potential game changer.
Okay.
By making Llama open source, Meta is basically inviting the whole world to collaborate and improve on it.
Okay.
So imagine thousands of brilliant minds
Yeah.
all contributing to the development of this model.
So instead of keeping it a secret, they're like, hey, let's all work on this together.
Exactly. And that could lead to incredibly rapid advancements.
Okay, so that's their strategy.
So a pretty powerful one.
All right, so we've got the Y,
Right.
ASML, TSMC, Meta. They're all in this AI ecosystem.
They're key players.
But the Motley Fool also called them bargains, which always makes me nervous.
I understand.
Can we look at the financials?
Let's do.
See what makes them good value right now.
All right, let's start with ASML.
Okay.
Their stock has actually dipped recently.
What?
Really? Yeah, because they lowered their revenue expectations for 2025.
But they're the only ones making these machines.
I know, right? But there are a couple things happening. First, there have been some export restrictions.
Oh, right.
Especially targeting sales to China.
Oh, wow. So that...
Which is a huge market for them.
Yeah, that's gotta hurt.
Yeah, it's impacting their growth in that region.
Ah, those geopolitics.
It all comes back to that.
Yeah.
And on top of that, there's this general economic slowdown.
Oh, yeah. Everyone's talking about that.
Yeah, it's impacting demand across many industries.
Including semiconductors.
Exactly. So some of ASML's customers are delaying orders.
That makes sense.
Which further affects their revenue.
So they're facing some headwinds.
Yeah, a combination of political and economic challenges.
But their stock's a potential bargain.
Well, here's the thing.
Okay.
Their price-to-earnings ratio, or PE ratio, suggests the market might be undervaluing their long-term potential.
So the market's focused on the short term.
It seems that way.
But for someone who's thinking long term...
Right, ASML could be a chance to buy low.
Hoping for a future surge.
Yeah, when those geopolitical issues and economic conditions improve...
It's a gamble, but a calculated one.
Exactly. Weigh the potential rewards against the risks.
Okay, let's move on to TSMC.
Okay, so unlike ASML, their stock's been climbing steadily throughout 2024.
They seem to be doing all right.
They are. They're directly benefiting from that surge in demand for those advanced chips.
Right, the AI chips.
Exactly, especially the ones for AI applications.
So they're the ones making those chips.
Yeah, they're powering data centers, self-driving cars, all that AI stuff.
I see. And they're tied to NVIDIA and Apple.
Strong partnerships.
Makes sense. Their financials must look good.
They do. They've got strong revenue and earnings growth.
Wow.
And their gross profit margins are healthy.
So they're managing their costs well.
Yeah, very efficiently. And their return on equity is strong.
That's it for investors.
It is. They're delivering growth and profitability.
But how much of this is just because of AI?
That's a good question.
Because they do make other chips.
They do. They have a diverse customer base.
Oh, okay.
And cater to lots of industries.
So they're not just an AI company.
No, but AI is definitely a big driver.
That's smart. Not putting all their eggs in one basket.
Diversification is key.
All right, time for Meta.
Okay, the elephant in the room.
They've had a wild ride.
Yeah, ups and downs.
Metaverse, privacy issues, competition.
It's been a lot.
But their stock's trading lower than the S&P 500 average.
Yeah.
Even though they've had some good growth.
Right, it's interesting.
Why is the market so down on them?
Well, I think it's a case of perception lagging behind reality.
Yeah.
Meta's faced challenges, but they've also made progress in their core business and new areas like AI. Their revenue and earnings growth lately has been really impressive, driven by their advertising business and their platforms like WhatsApp and Instagram.
So the market's stuck in the past.
It's possible. Investors often react emotionally to news.
Yeah, that makes sense.
Which can create a gap between how a company is actually doing
and how the market sees them.
Right.
So Meta might be a value play.
It's one way to look at it.
Undervalued by the market.
Potentially.
But there are risks, right?
Of course, every investment has risks.
What could derail Meta's comeback?
Well, one big concern is the regulatory scrutiny they face.
Oh, right.
Data privacy, antitrust issues.
It's a tough spot.
Governments are cracking down on big tech, and Meta's often a target.
So any action could really impact them.
Definitely, their ability to operate and make money.
It's a tightrope walk for them.
Yeah, they need to innovate, but also be careful.
What else should we be thinking about?
Well, the competition in social media and advertising is fierce.
Yeah, it's a tough business.
Meta's still dominant, but companies like TikTok are gaining ground.
Oh, yeah, I've heard about that.
Especially with younger users.
So Meta's got to stay on top of things.
They need to keep innovating and adapting.
Okay, so it's not just about fixing past mistakes.
Right. It's about staying ahead in a fast-changing industry.
This is a lot to consider.
It is. We've covered a lot.
Financials, the risks, the opportunities.
And we've only scratched the surface.
But even with all this, is it really a no-brainer to invest in these companies?
That's the million-dollar question.
Like, is it ever that simple?
It's exactly the kind of critical thinking we should all do.
You're right. We've got to keep digging.
Absolutely. There's always more to learn.
All right, we'll be back for part 2 of this deep dive to explore even more.
Sounds good.
So stay tuned.
Yeah, we're just getting started.
Welcome back. So we've gotten a good overview of these companies, but now I want to really dig into the numbers.
Okay, yeah, let's get into the nitty-gritty.
Like, how are these companies actually valued in the market?
Yeah.
especially given all the stuff they're facing.
Right. It's a complex picture.
Yeah. Where do we even start with the financials of these huge companies?
It can be a bit overwhelming.
Yeah.
But even these tech giants are built on, basic financial principles.
Okay.
So we can start with revenue and earnings growth.
Okay.
That gives us a snapshot of how they're doing at making sales and turning those sales into profits.
Right, the bottom line.
Exactly.
So let's go back to ASML.
Okay.
Their stock took a hit.
Right.
But their price-to-earnings ratio was looking good.
Historically. Yeah.
Can you remind me what that even means?
Sure. So the price-to-earnings ratio, or PE ratio, it basically tells us how much investors are willing to pay for each dollar of a company's earnings.
So it's like a measure of how much faith they have?
Yeah, you can think of it as a way to gauge whether a stock is overvalued or undervalued.
Relative to how much money they're actually making.
Exactly.
Okay, so a high PE ratio.
That usually means investors are optimistic.
They think the company's going to grow a lot.
Right, and they're willing to pay more for the stock.
Okay, so ASML's ratio is lower than usual.
Yeah, which could mean...
it's a buying opportunity.
It could be, yeah.
Because investors are paying less.
Yeah, they're paying less for each dollar of ASML's earning.
Than they normally would.
Exactly. And that could be because of those short-term factors.
Export restrictions.
Right, and the economic slowdown.
Yeah.
Those things can spook investors.
So maybe the market's overreacting.
It's possible.
And that creates an opportunity for someone who's paying attention.
Potentially, yeah, to get in at a discount.
That's pretty cool.
But remember, PE ratios are just one piece of the puzzle.
Right.
We got to look at other things, too, like
what?
Debt levels, cash flow.
The whole picture.
Right. The overall financial health.
Okay, so beyond the PE ratio,
yeah,
any red flags or anything good standing out?
Well, one good sign is that despite the lower revenue guidance, ASML's order backlog is still really strong.
What does that mean?
So they have a bunch of orders for their machines that haven't been fulfilled yet.
So they've got future business lined up.
Exactly, which gives them some revenue visibility.
Okay, so even if things are shaky now, they're probably going to be fine.
The long-term demand is there.
Because everyone needs those chips.
Exactly, for AI, 5G, all that.
It makes you wonder what those machines actually look like.
I know, right? It'd be fascinating to see one in action.
Yeah, okay, let's move on to TSMC.
Okay.
They've been doing really well.
Yeah, their stock's been climbing all year.
What are their financials looking like?
Really impressive.
Okay.
They've got strong revenue and earnings growth.
Driven by
the demand for those chips.
AI chips.
Yeah, especially the advanced ones.
So their strategy's paying off.
It seems to be, yeah.
What about their profit margins?
Their gross profit margins are really healthy.
So they're managing their costs well.
Very efficiently, yeah.
Anything else that stands out?
Their return on equity is strong.
What does that mean?
It shows how well they're using shareholder investments to make profits.
So they're a good investment for growth.
And profitability, yeah, they're doing well on both fronts.
But how much of their success is because of AI?
That's a good question.
Like we talked about.
Yeah.
They make chips for lots of things.
Right. They have a diverse customer base.
Smartphones, data centers, all that.
Exactly.
So they're not just riding the AI wave.
No, but AI is a significant factor.
So it's a mix.
Right. They're well positioned no matter what happens with AI.
That's smart.
It is, spreading the risk.
Okay, let's talk about Meta.
All right. The social media giant.
Their stock is trading lower than the S&P 500.
Yeah, even though they've had good growth lately.
Yeah, it's strange.
It is. It seems like the market is still skeptical.
But their recent performance has been good.
Yeah, their revenue and earnings growth have been strong.
So why the skepticism?
Well, one thing that worries investors is their declining operating margin.
What does that mean?
It means their expenses are growing faster than their revenue.
So even though they're making money, they're also spending a lot.
Right, and that can put pressure on profitability.
But they are investing a lot in new stuff.
That's true, especially in AI and the metaverse.
Right, so maybe that's why.
Yeah, those investments can take a while to pay off.
So they're spending now to make more later.
It's a long-term strategy.
But risky.
It is. There are no guarantees.
What else do analysts look at with a company like Meta?
Well, since they're so focused on new tech, they look at things beyond the traditional metrics.
Okay, like what?
For example, they track monthly active users across all their platforms.
Facebook, Instagram, all those.
Exactly, to see how engaged users are.
And if they're growing.
Right. Are people still using their platforms?
Makes sense.
And they also look at average revenue per user.
So how much money they make from each person?
Yeah, because that shows how well they're monetizing their user base.
Through advertising and stuff.
Exactly, because their business relies heavily on advertising.
So they're watching the ad market closely.
Oh, yeah, things like ad spending, competition, privacy regulations.
All that can affect Meta.
It's a complex picture.
Yeah, analyzing Meta is not easy.
It's not. You got to consider a lot of different factors.
Okay, I think I'm getting a better sense of how to look at these companies.
Go ahead.
But it's clear that numbers alone don't tell the whole story.
Definitely not.
We need to consider the other stuff too.
Right, the things that aren't on the balance sheet.
Like what?
Their competitive strengths, their management team.
How good their leaders are.
Yeah, and their ability to innovate and adapt.
Okay, and the global landscape.
Right, we can't forget about that.
Let's talk more about competition.
Okay.
Because these companies are in really fast-moving industries.
They are. Things change quickly.
So what are their positions and the threats they face?
Okay, well, ASML,
Yeah.
they're in a really strong position right now.
Because of their monopoly?
Exactly. They control the market for those machines.
But you said that could be challenged.
It could. No company is invincible.
So what could threaten them?
Well, someone could come up with a new technology.
That's better than theirs.
Right, a disruptive innovation.
So ASML can't just sit back
No, they have to keep innovating.
and investing in research.
Absolutely, to stay ahead of the game.
Okay, what about TSMC?
Well, they're the biggest player in the foundry space.
Right, everyone seems to use them.
They have great relationships with clients
Yeah.
and a reputation for doing things well.
But they have competitors, right?
They do. There are other foundries out there.
Like who?
Samsung, Global Foundries.
Okay.
They're all vying for market share.
So it's not just a one-horse race.
No, and then there's the trend of companies
Yeah.
like Apple and Amazon designing their own chips.
Oh, so they're cutting out the middleman.
Yeah, which could hurt TSMC in the long run.
So they got to stay on their toes.
They do. Keep innovating and adapting.
All right, last one. Meta.
Okay. The social media landscape is tough.
It's super competitive.
Everyone's fighting for attention.
And advertising dollars?
Exactly. And TikTok is a big threat to Meta.
Yeah, everyone's talking about
It's
TikTok.
growing fast.
Especially with younger users.
Yeah, which advertisers love.
So what can Meta do?
They need to find ways to attract those users back.
Right, or come up with something new.
It's not easy.
What if the threats are out there?
Well, there's always the risk of a new platform emerging.
Like a new TikTok.
Exactly, something that catches on quickly.
That's always a possibility in tech.
And then there's the whole regulatory landscape.
Right, all the privacy concerns.
Yeah, and content moderation.
That's a lot to handle.
It is. They need to find a balance.
Okay, we've covered a lot here.
Yeah, we've looked at these companies from all angles.
Financials, competition, the whole 9 yards.
It's a lot to digest.
And it's clear that it's not a no-brainer.
No, it's not as simple as that.
Investing requires careful thought.
Absolutely. And research.
And a willingness to look beyond the surface.
Right, don't just take someone's word for it.
But before we wrap up,
Yeah.
I want to go back to something you said earlier
Okay.
about management.
Right, the people running these companies,
How important are they?
they're crucial.
Really?
Yeah, a good management team can make all the difference.
So how do we know if they're good?
Well, we can look at their experience.
Okay.
Have they been successful in the past?
So they have a track record.
Right. They've faced challenges and come out on top.
Okay. What else?
We want leaders with a clear vision.
So they know where they're going.
Exactly. And they can communicate that vision.
To their team, to investors.
Of everyone.
And they can get people excited about it.
Exactly. Inspire and motivate people.
So it's not just about being smart.
No, it's about leadership.
And vision.
And being able to execute that vision.
Okay. Anything else?
Yeah. We also want to look at their integrity.
So are they ethical?
Exactly. Do they make good decisions?
And are they transparent?
Yeah. Are they open and honest?
Because that's important these days.
It is. Companies are under a lot of scrutiny.
From everyone.
Investors, regulators, the public.
They have to be doing things the right way.
Absolutely. It's not just about making money.
It's about doing it ethically.
And sustainably building trust with stakeholders.
That makes sense.
It's essential for long-term success.
Okay, we've really gone deep here.
We have. It's been a fascinating exploration.
But investing is complicated.
It is. There's no easy answer.
And the tech world is constantly changing.
That's right. What's hot today might be gone tomorrow.
So we have to be flexible.
Absolutely. Adapt to new information.
So as we go into the final part of this deep dive,
Yeah.
we're not looking for perfect predictions.
No, we're just trying to understand things better.
To make informed decisions.
Exactly. And encourage our listeners to do the same.
Great. So stay tuned for part 3.
We'll wrap everything up and leave you with some food for thought.
All right. Welcome back to the final part of our deep dive. We've covered a lot of ground with these three companies, ASML, TSMC, and Meta.
Yeah, we've looked at their financials, their competition, the whole picture.
So as we wrap things up, I'm wondering, what are the big takeaways? What should our listeners keep in mind when they're thinking about investing?
Well, I think one of the most important things is to remember that even when you're getting advice from a source you trust,
Yeah.
like the Motley Fool.
Yeah, they seem pretty credible.
They are, but it's still important to be a little skeptical.
Right. Don't just take their word for it.
Exactly. Dig a little deeper, ask questions,
Do your own research.
Yeah, exactly. Don't just rely on what you read in the headlines.
Or what you hear on a podcast.
Right. Take some time to really understand the company.
Their business, their financials.
Yeah, and the industry they're in.
Right, because things can change quickly.
Especially in tech.
And don't forget about those geopolitical risks.
Oh, yeah, those can come out of nowhere.
And really mess things up.
They can have a big impact on companies.
So I guess the big takeaway is...
Do your homework.
Yeah, be informed.
Make smart decisions.
And know what you're comfortable with in terms of risk.
Right, because what's right for one person
might not be right for another.
Exactly. Everyone has different goals.
And different levels of risk they're okay with.
And that's okay. There's no right or wrong answer.
And it's important to remember that even the experts, they don't always get it right.
No one has a crystal ball.
So I guess that brings us to the big question.
Okay.
After all this analysis, all this discussion, are these companies really no-brainer buys?
That's a tough one.
Yeah. What do you think?
Honestly, I think that's a question for our listeners to answer.
Okay, so we've given them the information.
The tools, the insights.
Now they have to decide for themselves.
Weigh the pros and cons.
And make the best choice for their situation.
Exactly, because ultimately...
It's their money.
It is, and their decision.
So that's it for our deep dive into these three companies.
It's been a good one.
I think we've learned a lot.
I know, I have.
And hopefully our listeners have too.
I hope so. Investing can be intimidating.
It can be, but it's also exciting.
And potentially very rewarding.
So we just want to encourage everyone to keep learning.
Keep researching.
And most importantly,
keep asking questions.
Yeah, because that's how we all get better.
Absolutely. It's a journey, not a destination.
Thanks for joining us on this journey, everyone.
Yeah, thanks for listening.
We'll see you next time for another Deep Dive Ream.